What's good, everybody? Happy Monday. Hope you're doing well. Hope you enjoyed this market move today. This is exactly why we do not try to time the markets, but of course, we'll get to that in just a few minutes or seconds, actually. Up here at the top, if you want to join us for a webinar, it's free, it's live, and we're going to do it on Thursday. We're going to do it at 7 p.m. and 9 p.m. for those of you on the West Coast. We're going to just show a bunch of examples on the difference $1, $5, $10, $20 a week makes in your retirement, based on, however long you have until you retire. So we're going to go over that. Promise to be very, very brief, very quick for you. And it's free. So you just got to go to webinar.jazzwealth.com. It's right there, actually. And you can register for that. If you're a client of Jazz Wealth, I think we've got everybody now, but just one last sort of heads up for you. If you have contributions that you want to mark for 2017, then let me know. If you haven't done so already, happy to help you with that. We'll get you set up. I think that's all I have for you today as far as housekeeping. That is correct. Let's jump over to the markets here. So there we go. On the charts there, you have the S&P 500. What a strong day here for the markets today. The Dow was actually higher by 672 points. The S&P that you see on the screen here added 70, and the Nasdaq 100 was higher by 227 points. This is a great example of why you do not try to time the markets. Had a few customers say, hey, why didn't we sell our positions and then get back in when things are discounted? Well, this is why. I'm not saying this is the bottom, but how could you possibly know that selling on Thursday was a good idea, buying back again on Monday would be a great idea? It's too late. The markets opened and tore off to the upside today. So this is why we don't time. There's going to be some bad times. There's going to be some ugly times, but we stick with it. All of you that have weekly contributions going through that went in last Thursday, Friday, very nice, right? You got a great discount. So just like we did back in February, it paid off nicely. We'll see. I don't know. I like that the banks bounced back today. The reason was trade wars, right? Everything was calm on the trade war front. China, when I woke up this morning, I saw the news from China that they were even going to buy more of our semiconductors, or at least try to make a deal for that. Well, what does that mean? Right? We know after talking about this on this webinar or on this live thing that the semiconductors and the banking stocks rule all. So if the semiconductors were doing well today, right away from the start of the morning, oh, everything's going to be good with them. They started higher and they finished higher on the day by 4%. The financials finished the day higher by 3.25%. So looking pretty good there as well. Great, strong, supportive move here in the market. That's the power of the semiconductors. Let's move on to some of your investments today. Tech is going to be your big focus today. Up 4%. Very, very strong move. We go over to emerging markets. They recovered. We need those as well if we're going to have a nice recovery. Those did well. Just generally speaking, stock market, large caps, small caps, mid caps, any cap was up today doing well. Even energy got another 2% in there, so looking really, really sweet there. REITs recovered a little bit from their decline. That's about it. Everything looking pretty good. Even bonds didn't get hit too hard, so not so bad. Some stocks that are in the news today. Facebook. The investors decided they were going to buy the dip on Facebook. That stock was down 6% in the morning. Here's the blip that you see. If you're watching this for the first time, down here, this move, this one blip is today. The one before it was yesterday, or was Friday, and so on and so on. They all represent one day. Well, this morning the stock sold off almost 7%. Really strong move lower. FTC announced they're looking into this sort of the breach that came out. But investors said, you know what, that's too far too fast. We fell all the way down 20% going back over the last 7 trading days. And investors said, that's a discount, 20% discount on Facebook. This will pass. They'll go through it. They'll figure things out. And the stock recovered all of it and traded in the positive for the day. So really, really strong there. Let's move on to Lowe's. The Lowe's home improvement store. Home Depot's competition, although not really much competition. Their CEO is retiring today. So the stock was up 6.5%. How does that make you feel? Like if you're the CEO and you retire and the stock shoots up, like you're trying to get the stock to do better. You're trying to work out everything, and you retire, and then boom, 7%. So that's the only news from Lowe's. They're going to look for a new CEO. The current CEO will stay there until they find a new one. Microsoft, Morgan Stanley, or who was it? JP Morgan? Morgan Stanley had some analysts that came out today that said they believe that Microsoft will make it to the $1 trillion in valuation, since they've decided to kind of adapt the cloud more into their process, and they've done a good job doing it. The analyst actually said price target for 1 year, their 12-month price target is 130. So they think it's going from here to 130 in the next 12 months. That means there's a 40% potential gain here for Microsoft if you believe what that analyst has to offer. So pretty cool. $1 trillion. Like all these companies are racing to the $1 trillion mark. Who's going to get there? Not General Electric. General Electric is the last in the news here. New lows, fresh new lows. I just got a little alert that popped up. This is the lowest that it's been in 10 years. Remember, the company's doing a huge overhaul. They're selling off all kinds of bits and pieces of their company. They've got a long way to go. So still a falling knife, as they say, for General Electric. Do I have anything else for you? I think I've covered it all. It's kind of just a good Monday morning. Everything's starting off strong. Obviously, there's a lot more to go for the markets to recover. Also Thursday as well. But for now, we've wiped out all of Friday's gains or losses. And this is why you don't try to time the market. I will only push you to be consistent. I will never push you to do anything that's outside of your comfort zone besides being consistent. That's the key to this game. Today was a great example of that. Thanks for watching. If you have any questions, you know where to find me, and we'll talk to you soon.